right. Well, I am very much looking forward to this session. I think that it's best, particularly when dealing with such high-profile and important regulators, to have each of you introduce yourselves. But again, my name is Chris Brummer, and I'm the CEO of Blueprint and the founder of DC FinTech Week, and a professor over at Georgetown Law. I'll let Sarah, maybe you can introduce yourself.
Hi everyone, I'm Sarah Pritchard, Executive Director for Markets and International at the UK's Financial Conduct Authority.
Hello, I'm Rajaraman, Chairperson of the International Financial Services Center Authority, an offshore financial platform and a unified regulator for this offshore financial center. Thank you. In India. Thank you.
Good afternoon, everyone. I'm Jutaro Kaneko, Deputy Commissioner for International Affairs of Japan Financial Services Agency.
Well, I think this is such an interesting topic because we're talking about global financial regulation, AI, and startups, which is really an interesting combination. You don't really hear too much of a conversation about it. Sarah, I guess we'll start with you. I mean, when you think about AI and when you think about large language models and everything revolutionizing financial markets more generally, over at the FCA, what kinds of policies are you exploring that are really trying to draw this age-old sort of balance between innovation and integrity, particularly as it applies to AI related risks?
Well, it's a great question, and to start with, at the Financial Conduct Authority, we are really supportive of innovation. We have just reached a big milestone with the 10-year anniversary of the launch of our initial innovation services. So the support for innovation is absolutely there. And when we think about that in the context of AI, very much going back to what our job is as a regulator. So our job is to make sure that markets function well. Our job is to make sure that there is an appropriate degree of protection for consumers, that there is market integrity, that we're promoting competition in the interests of consumers. That's an interesting objective that the FCA has. And also that we're supporting the UK's international competitiveness and growth. But we take a pro-innovation approach to that. And I think if you think about AI, I think your starting proposition was large language models going to revolutionize financial services. I think I'd just pause on that, actually, because we don't yet see that in practice. We regularly survey, jointly with the Bank of England, the adoption of AI, the adoption of large language models in financial services, and the next survey that we will publish imminently in the next few weeks will only show 17% of firms reporting use of large language models. So I think we need to just keep a watchful eye on will it revolutionize or not. And some of that then goes through to does AI need a new regulatory framework or not. Our starting proposition in the UK is that our existing rule set, our outcomes-focused regulation, which I can talk a little bit more about later, ought to be sufficient without a specific new rule set for AI.
That's really interesting, for particularly that number of only 18%, and I guess digging into why and whether or not it's a harbinger for nothing to come, or whether or not it's a stance on the industry is really interesting. Jutaro, I mean, Japanese fintechs are not only active in Japan, but they're certainly looking to expand globally. What kind of regulatory framework are you thinking about, and are your colleagues thinking about, that could encourage AI innovation, but also is enabling for foreign startups looking to set up in Japan?
Well, actually, echoing Sarah, I find it a little bit premature to develop specific regulation for the use of AI in financial services. So currently, we are conducting public consultation to collect useful opinions from the industry about pros and cons, the potential benefits and risks associated with the use of AI in financial industry, and expectations for us, the regulators. And going forward, we will develop a discussion paper towards next spring. At this time, so there is no regulation in place. But well, we want to be fintech friendly. So well, we support the Japanese startups, which includes some IT AI developers, to expand their activity globally. For example, well, the Japanese government as an entirety, including the local government, are supporting the startups, including AIs, to have booths here in Singapore at SFF, and so did we in the previous fintech festivals in other countries, including Mumbai, the one in Mumbai. So, as far as I know, the problem about the AI startup is lack of visibility. In this regard, I find it quite useful for us to help them have booths in such a huge events.
Yeah, you know, just sort of tying, I think, some of those observations together, I find it interesting because, you know, when you look at established players and whether or not they use AI or not is an interesting question. And then, you know, is the activity something that you're more likely to see with the startups is also equally interesting. And then obviously, you know, what that means longer term for the industry. Regardless, you know, as long as data is digital, AI is global, which, you know, leads to this question amongst many different regulators, you know, about the regulatory approach. Rajaraman, when you look at India in particular, Mumbai included, you have a rapidly growing fintech sector. Has the IFSCA considered going big and perhaps global governance or some kind of global governance body when you think about the particular risks and opportunities that frontier AI models in finance create? Is this something that you could envision being managed at a global level, or is this something that you think of more as a national preoccupation?
So let me put it this way. I mean, I think as a regulator, I mean, I think we don't really pitch for one or the other. I mean, I think we are here to kind of see that fair market practices, I mean, are the order of the day. I mean, I think, and intervene when it's necessary. So what we have in the International Financial Service Center is an innovation and a regulatory sandbox, where we have let companies come and do experiments under our supervision, and then we try and see if it actually fits within the regulatory, I mean, I think the parameters of fairness, market play, I mean, market integrity, and so on and so forth. So we have experiments going on in tokenization, in things like payment systems, cross-border payment systems, and so on and so forth. So at this point of time, AI to me is something which whose scope and its applications are just evolving. So at this point of time, regulations without a proper understanding of what this technology can do or cannot do, I think would certainly be inappropriate to me, I think. So what we would see in India, for instance, the national policy has been governing what we do. I think we have the Ministry of Electronics and Information Technology, which is part of the global GPAI, which is a group of countries which actually work on how AI can be guided in its development. So the current policy of the government of India has been to let the industry be responsible for what they do, I think. So following the normal constitutional law and so on and so forth in terms of non-discrimination or ensuring that there's no bias or ensuring privacy is honored and ensuring transparency and so on and so forth. So we would rather be guided by those principles rather than going for prescriptive regulations. So I think at this point of time, let me also put it from an industry perspective. Putting blocks through regulations which are probably not very well informed may actually stand in the way of technology developing and probably coming out with use cases which can actually benefit the world at large. So I would say that I think it's early days, and regulating anything without an understanding may not be the right way to go forward. So I would say that, like the conversation we had, letting experiments happen, supervise those experiments, and see for yourself as to what are those pluses and minuses, and then come out with some kind of understanding. And that's the second part is that today the business is cross-border. So therefore, for a country to actually implement something and the other countries not to implement it may also have a problem in ensuring the cross-border flow of financial services. So I think there has to be greater traction and consensus in the international community before we actually come forward with something as strong as a regulation. At this point of time, I think at best what we can do is to issue advisories. Say that when you have a language model which in the financial services market, it should come with a proper disclosure to the customer. The customer should be informed that here is a case we are using a model, its outcomes can be unpredictable, so user beware. So I think that's the best way to go forward at this point of time. Disclosures, I think. Thank you.
I like disclosures. That's what I teach in my class, is what we're thinking about in general. And I didn't know, because I just saw you both sort of shaking your heads in agreement on different points in this particular question, but I will assume then that we're not going to have necessarily tomorrow a global AI United Nations, and instead it'll be more of an approach looking at experimentation. I'm hearing words like sandboxes. Just to follow up, just one little question. Is that as much to get more information from a regulatory perspective, or is it so that the industry can sort of develop and get more information about itself?
So my view is that the use cases themselves are in the process of getting established. I see applications in compliance management, applications in things like wealth management. So there are many applications which are coming up, which I can see in being implemented by many fintechs. So that be the case, I think we should, at this point of time, look at the impact of use of AI on the market, on market fairness principles. So once we probably have greater understanding of these, I think probably then it's time for regulation, not at this point of time.
Yeah, really interesting. So, Sarah, when you hear this conversation, I mean, certainly technology is only going to become more complex over time. Adoption aside, the technology will continue to move forward quickly. When you attempt to sort of get your regulatory brain around this pace of development, the natural question comes up, we've just heard, which is what are the proper regulatory responses? And there's a very large toolbox that can be deployed. Are there any sort of tools of preference that you have in terms of how you and the FCA really want to address AI?
Yeah, so I'd highlight two ways of thinking about this. One, what approach can we take as a regulator to foster that safe innovation? Now, absolutely, there's things we can do. The experiments that are being talked about, we have a number of sandboxes in the FCA. When we made our digital sandbox permanent, that was at the request of industry, who said, please, can you have an always-on sandbox as opposed to a sandbox which we have to remember when it's open for us to come and make applications to. And I think we've seen 53 AI-type propositions being tested in those sandboxes. So I think we have a role as a regulator very much to support that safe innovation. Linked to that, we're also interested in how you guys in the room that represent startups and those that are involved from an industry perspective are thinking about it as well. So we do our survey. As I said, it's currently shown in established financial services players a very small percentage of usage of large language models. Now that, of course, could change. We want to make sure that we're open and engaged in those conversations to see how firms are considering this. We see a really broad range of risk appetites, mostly deployment in back office or risk management functions. I think it's going to be really interesting to see how AI develops, particularly in the fin crime space, financial crime space. We have just entered a partnership with the Alan Turing Institute to look at the possibility of taking real data sets to turn it into synthetic data sets to enable AI models to be trained to help from a financial crime perspective, which I think is a really interesting way where we are ourselves facilitating that experimentation with others. And then if I sort of move us away from, I think we have a big role in supporting that innovation against the current rule set, there's a do we need a future rule set? And as I said, very much in the UK, we are outcomes focused. We're really committed to that. We say that is more future-proof as long as there is enough regulatory certainty around that. And the two things that we point to very specifically that help us with that are our consumer duty, which is still relatively new in the UK, but says fundamentally for those that are interacting with retail customers, you need to deliver good consumer outcomes. And then we have our senior managers regime. So that ensures that there's sufficient governance controls, risk management controls around how firms operate. Now, we say that those two together should provide enough regulatory certainty in terms of what we will always care about, but enable firms to innovate safely. And of course, that is our starting proposition. Our starting proposition has been, let's use our outcomes-focused regulating without writing a very prescriptive rule set. Now, we're testing that. Industry tell us, yes, that's the right approach. Please don't do a very prescriptive rule set because by the time you write it down, it will be out of date. But we need to keep testing that and being open, which is where the AI lab that we launched in October provides this mechanism for a much more structured exchange with industry to help us work that through.
Okay, this is a silly, nerdy law professor question, but like, how does that actually work in practice? So, when you're using a more flexible approach and you're seeing something, is this, sort of informally sort of leaning in where the regulator sort of provides maybe a speech or guidance, or is this more of a phone call to ask, so what are you doing, or are you just leaning on the sandbox? I mean, what does a objectives-based approach look like in the UK?
Well, if we take the consumer duty, because that's our flagship new outcomes-focused regulation. Of course, there's many more rules than just deliver good outcomes for retail consumers, but that's the sort of fundamental principle. So we've set out, and we went through a really extensive consultation process on this to make sure that we've got the right level of specificity, but without saying you must do X, Y, and Z in every single circumstance. It's an ongoing conversation because it's a culture change for us, and it's a culture change for industry. My reflection is we fill the space where we do fill a lot of space through speeches. I think if you take a look at our speeches on AI, our Chief Data and Digital Intelligence Officer, Jessica Rusu, very, very frequently speaking on AI and all our innovation propositions, so alongside our CEO, Nikhil Rathi. So we do try and give some of that through speech.
In the new delivery of financial services. Gerato, when you think about Japan's place in that conversation, I'll ask you another variation of this question. We've heard about sandboxes. We're hearing about speeches, and I'm sure conferences. What are the preferred tools in the toolbox that you're exploring when it comes to overseeing and supervising AI?
All right. Well, I believe that the principle of same activity, same risk, same regulation is applicable to the use of AI in financial services, although we are still in the process of communicating with the relevant stakeholders. Having said that, as was mentioned, the speed of the technological evolution in the area of the AI, well, specifically speaking, Gen AI, is very fast. So the regulators need to be very agile. In this regard, this is just my personal opinion. What makes me nervous the most is the risk arising from hallucination from the viewpoint of consumer protection, specifically retail investors' protection. So luckily, or I don't know why, but as far as I know, there is no AI vendors who initiated providing services, B2C services in, say, investment advisory. But should there be any services in the market before some effective measure to mitigate the risk of hallucination, which I understand is intrinsic to the technology. So guardrailing measure contrived. I would want the AI vendors to be very, very cautious. At least my expectation is that they fully compensate unconditionally too the economic losses incurred on retail investors misled by hallucination of LLM, for example.
Yeah, I mean, that question of hallucinations, and I'm jet-lagged myself, so I may be having one right now, is really a question that's interesting because it gets to the heart of whether or not the proper disclosures are being made so that people can even use those tools correctly, whether or not there is some kind of harm in terms of fairness, in terms of use. Systemic risk obviously becomes an issue depending on the size of the company. But when you assemble international regulators like yourselves together to address such a fast-moving target like AI, and I'll ask all of you, but maybe I think with this question of global coordination, Rajaram, I'm really curious to get your perspective. Certainly global rulemaking, it's not new. You've sort of intimated on these different regulatory standard-setting bodies that can lean in on almost any issue. But is there something about AI that makes global coordination different? Like, is it inherently difficult or different from a substantive matter? And then even from a coordination matter, does it require different kinds of strategies, particularly when you think about small companies that are looking to scale?
So it's a good question because the impact of AI could be different in different sectors. Like in the securities market, it can have one kind of impact, different kinds of use cases, which may be different for banking. I mean, it could be similar, but it could be entirely different as well. So I would suggest that maybe a lot of work should actually be taken up by the international standards organizations. Like for instance, in the securities market, you have IOSCO. So IOSCO could be, then BIS could be for the banking. So there could be some of these, the Indian International Association of Insurance Supervisors. So some of the work could actually be pushed into those places where they could look at domain-specific applications of AI and probably come out with a little more clarity on how, if not regulation, advisories can be developed. So I would also put it this way. Since I come from a product background, I think so. I used to be the permanent secretary for telecom in the government of India. So in all these products, you have the standards. You have the ISO standards for various products. So for a application which is consumer-facing, I think probably there is need for evaluation of some standards on AI. I think which perhaps could be certified by a third party. I think somebody, an international reputed, certifying bodies could test that against those standards and see whether actually it meets those tests of privacy, of non-discrimination, of explainability, and so on and so forth. So I feel that probably we should move in that direction because it's not the regulators. It's not within the regulators' capability to test such complex systems where something can be hiding in just one line of code. I think. How do I know? So therefore, it's better that probably there should be a lot of onus on the person providing the service by proper disclosures. The second level could be some testing through some reputed testing bodies. And a third could be, there is a third angle also to it, which I personally feel. The regulator's capability itself to actually understand technology is in doubt. I think. I'm again speaking as a regulator himself. So because it's so fast moving, that the ability to understand this technology is also a little lacking, a little more than lacking in probably regulatory organizations. So I think building our own capability to understand the technology is also probably on the table. So I think I would leave it at that, I think, to answer your question.
Well, and it's interesting, even when you get to those international standard-setting bodies, the fact that you're not dealing with international treaties, but instead, these informal standards, soft law, it at least enables you, it gives you a little bit more flexibility and speed in terms of deploying certain kinds of expectations. But again, Sarah, I'll ask you that same question. I mean, is there something about AI where this time is different? Where AI is actually it creates different kinds of coordination problems, or there's something about it that makes or changes what international or cross-border coordination should look like?
Well, I might just have an overly simplistic view of the world, but I fundamentally think that there's a lot of the same issues that we deal with in any parts of, what does the regulator care about? We care about consumer protection, market integrity. There's nothing new that we care about. It's just there are potentially different mechanisms for transmission of risk. So the ability for us to understand that and then to be thoughtful about what that means is important. So with that in mind, I think sharing information internationally, coming and speaking and finding out how industry are thinking about this, how our fellow regulators, is clearly really important. So the role of international standard setting bodies remains very important, something that we're very committed to. IOSCO and the Global Financial Innovation Network, which we co-chair as well. So the ability to convene those conversations, to just listen to what is happening here. I think you made a really good point on skills and capabilities. I don't think it's good enough for regulators that don't understand how propositions are developing to fully then comprehend what that might mean for a regulatory framework, which is where we've been investing in our own skills and capabilities. We're also thinking about how do we use this technology to help us do some of our supervisory work, or some of our identification of higher risk firms to go and use our to go and visit on a supervisory basis, not in an AI space, but in the broad remit that we have. So international partnerships, international discussions, Global Financial Innovation Network, very important. What's difficult internationally? Well, information sharing, like data sharing, when it relates to personal data, is always very complex. I suspect it will remain very complex. I don't think AI will solve that, or maybe it will. But I think sort of same risks. But again, the importance of that international engagement remains front of mind.
There's a lot in that answer. I like that answer. Qu'est-ce que c'est? Is there something new? Is there something new with AI and coordination?
Well, in the cross-border context, I don't think it's only the case with Japan, but what makes risk management with the AI a little bit special is that the dependency on third-party vendor and third-party developers of the AI, as well as the concentration of the providers. In this regard, I believe supervisory cooperation between host authorities and home authorities is indispensable. And, well, of course, we are keen to actively participate in the discussion to develop some necessary standards at different international organizations, including IOSCO, FSB, BCBS, whatsoever. But, well, to keep up with the pace of technological progress, I think what we can do at present time, at now, is to enhance supervisory cooperation, including the jurisdiction, the authority where the AI is very dominantly developed and sold.
You know, what's really interesting is, as I listen to that answer, is I tend to, like many people, when you hear and you think about AI, you think about disintermediation, but what you're also pointing to is an accelerated unbundling of financial services, right? And that in itself then introduces a new kind of complexity in terms of how do you then go about looking at, who those new market players are and sort of where are they in the sort of supply chain of financial services, and that's it's like good luck to you guys on that, because it'll be one of those harder things to figure out. We only have I guess one last round of questions, and so as I listen to you, you guys sound pretty darn, dare I say, optimistic about AI in financial services. And as regulators, I don't know. Well, I guess I can ask you, just sort of hearsay, whether or not you guys think that that's a fairly common sort of attitude. But if you're going to think about what are the I guess two risks that come to mind for each of you. Number one, in terms of from a startup's perspective, what do you think is sort of a landmine or kind of a potential pitfall for a startup? And then number two, is there anything that does keep you awake at night with AI? Really curious to get your last and final thoughts. Rajamohan, I'll start with you.
Yeah. So, in fact, in India as well, I think not related to AI, but fintechs have been found wanting in some areas. Like, for instance, I think they are very eager to serve the market, but sometimes they overlook risk and compliance issues, I think. So therefore, from that perspective, the risk of liability, the market liability that they carry when they render services, and then there is a need for explainability and accountability that follows thereafter. So I would feel that the fintechs themselves must ensure that the risk management of the product that they are offering to the market must be of a high order, I think, which meets the test, so that it protects themselves against litigation and the consequences of compensation and so on and so forth. So that to me appears to be the biggest factor which fintechs must be conscious of when launching a product in the market.
That's really interesting. Liability. We know nothing about that in the United States. We know nothing of lawsuits. But no, that's fascinating. Sarah?
So look, I think we want to see safe and responsible use of AI. I think we see our financial services firms actually being quite cautious before they rush to mass deployment. Mm-hmm. So that's why I'm not sure optimistic's the right word, but comfortable that we're having the right conversations and that people have this front in mind. The thing that keeps me awake at night is how AI will be turned against by the bad actors.
I'm sorry, how it'll
AI will be turned against financial services by the bad actors. So what about the risk of market manipulation? We've got a really good example of Martin Lewis in the UK, a big consumer champion, a deep fake video of him on YouTube. He famously never encourages anybody to invest in any particular product. There's a video of him, looks like him, sounds like him, telling people to invest in a particular product. So I think there are two different things there. There's the sort of, are we speaking to our financial services firms about how they're thinking about AI? Yes, we are, and I think we're stepping that through. But what about the risks of AI deepfakes being deployed against financial services and financial market infrastructure? So that does keep me awake.
Oh.
But that's a whole different panel.
I was very tired after my flight, but that will now keep me awake as well. Thank you very much for that. On both questions, the startups.
You may be right that I'm optimistic, but to be precise, I'm intentionally trying to be optimistic. I understand that startups is the source of innovation, so I don't want to kill the goose who bears golden eggs. Having said that, it depends on the risks. So, instead of prohibiting all the activities potentially good, for the sound development of the financial services, I would like to be very watchful to precisely detect the source of risks. In this respect, I really want to avoid unhappy ending between the retail consumers, the most vulnerable ones who we need to protect the most. And startups, hopeful startups. So, as I said, my biggest concern for now is the potential risk caused by hallucination. Because, however hard, intensely, we urge the general citizens to be equipped with decent financial and IT literacy, the hallucination is just too strong. Yeah, everybody can be misled by their, how should I say, sophisticated lies. So, to protect the retail investors, especially in case the AI vendors not unconsciously of the potential risk, started selling their products B2C. I want to alert the potential risk. Yeah.
Yeah, when you mention financial literacy, I think that even now that there's a question of technology literacy. And so, like, what does that concept mean? How does it fit into financial literacy? Is it something different? Sometimes, the 15-year-old may know a lot more than the 45-year-old. How do you measure and you gauge that? Is that important? Exactly. As I sort of encapsulate all of the conversation, it harkens back to something that I wrote a long time ago about something called a trilemma because I'm a lawyer, so I have to make an economic term out of things. A trilemma for financial regulation, which is how do you encourage innovation, how do you achieve integrity in your markets, and how do you do it with clear rules? It's very hard to do all three of them at the same time. You can have clarity by saying no to everything, but then you don't get innovation. You can have clarity by saying yes to everything, and then you end up with some risk that you want. Or you can try to get innovation and risk, but unlike apparently the UK, in the United States, our experience is reams and reams of rules that can be hard sometimes to implement and to understand and to supervise. So I wish all of you the very best of luck as you try to navigate that trilemma with AI and startups. Thank you so much for your time.
Thanks.
Thank you.
Thank you.
Thank you so much, Chris, and of course your amazing panelists, of course, charting the way for sort of AI regulation. How do we manage it going forward? Now,